going to be a special market address. This is prior to the market opening on Tuesday. What we are seeing currently, as at the moment in the futures markets, the Dow Jones Industrial Average is down roughly 1.3%. It is set to open at the moment with about 2 hours left until the market truly opens at 24,700. It is down just over 300 points. And really this is in response to the escalation in the trade wars. President Trump overnight has asked his administration really to find an additional $200 billion worth of Chinese imports to be slapped with a further 10% tariff. And obviously the market at the moment across the board, this is also very relevant to the S&P and the NASDAQ, but really the Dow Jones Industrial Average at the moment is copying the brunt of this recalibration in pricing, at least after hours, is set to open considerably lower. Now, as technical analysts, we obviously have to move with some of the changes that do happen out of the blue, so to speak, or in this particular case, that of an escalation of something that has been very much so talked about over the past number of months. And we just have to move with that as the price action unfolds. What this video is going to be right now is me trying to at least succinctly break down this market and to give you a very straightforward response as to what I'll be looking at and how to really interpret, I guess, the structure of the market, and just to give you some real pressure points on the market for what you should be paying attention to. Now, I don't know how the market is obviously going to trade as at after the open. Yes, it looks as though we are going to see a relatively large gap to the downside, but it's anyone's guess at the moment whether or not we're actually going to see really sort of true follow through to the downside, or who knows, potentially this market may be bid and we could very quickly see that of a continuation of another hammer candlestick, candlestick under construction, so to speak. That really isn't the crux of today's discussion. On my screen at the moment, you can see this green line here, 24,700. Just imagine that's where the Dow Jones Industrial Average is going to open. Now, what is most important at the moment, just to give you a very straightforward but also very pertinent sort of breakdown of this market, you have to, I guess, interpret the market as such, okay? And really to begin this sort of presentation, I want you to begin with the second low that we established after the February sell-off, where we based down here just around 23,750. We came back down, we hit it again, and we touched it on a third and fourth occasion towards the end of April into the early stage of May. And that is what has given us really this trend line that we've been working with and really setting up a bunch of bullish trades on the diamonds or even off from the SPYs and also the Qs that has more so aggressively moved when we sort of compare that against the industrial average and the S&P 500. So what you can very easily do right now is say to yourself, well, as long as the equity markets remain above, okay, the extension of this trend line, because every time we have come on back down and interacted into it or very close to it, it has continued to actually be bid. And as long as we remain above this trend line here, this trend line is key. I mean, in the past, we've spoken a lot about this horizontal support. This is at a lower area now. This is between 23,750 and 24,000. We're trading up here more or less at 25,000. Yes, we are set to open a little bit lower, but as long as we remain above this bullish trend line, this is going to be a buy the dip opportunity. Now, the question becomes, well, say for instance, we see a little bit of a sell-off and a follow-through really during Tuesday's session, and we start to interact down at 24.5, and it looks like we're not slowing down. I don't think this is going to happen. But then we have to really sort of reconsider our expectations on this market moving forward. I am still overwhelmingly bullish moving into Tuesday's session, albeit we are expecting that of a large sort of pullback, at least to begin the session. But very easily we can remain bullish as long as we remain above this bullish trend line, but also remain above this little swing low over here. If we start to see the dynamic of this and really the structure begin to shift and break, and this is really coming in below 24,250. I'm not suggesting it's going to happen as at today's session. It's probably not going to happen this week, but I'm just throwing it out there because there is going to be a lot of words probably spoken about today's session. And who knows, there's going to be probably a lot of doomsdays coming to the forefront when you're talking about the media, or at least the financial media, and the escalation of going on of what is potentially about to happen with the US financial markets. It's very easy to suggest that, look, as long as we remain above this, everything is fine moving forward. We shouldn't at least expect this to break if the market is going to remain bullish. And even if we go through the technicals once again, notwithstanding, of course, this little bit of a shift that has taken place outside of market hours, or at least outside of the market close as at Monday, we're still holding above these exponential moving averages. So there is going to be a little bit of a battle going on at this 50. We can almost guarantee that we should retest and retag this 50 from the bottom during Tuesday's session if this is going to be the true open. But just like we did over during this period, and I need to go back and reference this period towards the end of May, just as we did over here, and just as we have done in the past down at the other sort of relative areas of support that have continued to hold, we have seen that reactionary bid enter into the market. And generally, I guess the consensus has been, or at least the morale of the market has been, for those who have a cool head and who can keep and remain a cool head and hold during these little pullbacks, you've been rewarded as the market has once again continued to price in a series of higher highs and also set up that next consecutive series of higher lows as well. And I'm not expecting this dynamic to shift. What we should be expecting, however, and at least be open-minded about, is the potential of a little bit of market volatility, i.e. to the downside. If it chooses to happen that way, we're obviously going to have to work through Tuesday's session, and I will bring you another recap towards the end of today's session. But I just wanted to make that very clear, very obvious, but also very important, okay? Breakdown of the market. It's not so much a breakdown, but you have to understand these trend lines in a market, they are in effect until they have broken, or at least they have given us definitive signals that they have broken. And really, where X marks the spot for that is anywhere between 24,000 and 24,250. And the reason for that is because, one, it's below this swing low over here, and it's also below this bullish trend line that has continued to hold for the past 2 months, okay? It may act as a target over the weekend. We spoke about another hypothetical green box down in this general vicinity. If, of course, we do overshoot this rising 50 exponential moving average, it looks as though we may potentially do that. But again, this is largely contingent on what happens during Tuesday's session. Again, for the S&P 500, that figure that you should be paying attention to is above 2,700. It might only be as low as 2,725. I've spoken about this horizontal line coming in through here. We even have this green rectangular box. And again, there's a very good chance that we do, at least even on an intraday basis, coming back down and retest this green rectangular angle. Now, yesterday, as at the close on Monday, I was speaking about, well, I've been toying with, is it too soon and too premature to bring down this bullish entry? Because again, we're under the mindset that again, we can jump into this market once we see the reversal set up. And as at the close on Monday, we got that first candlestick. It was that of a hammer candlestick at support. Now, we don't have a true reversal yet. We don't have any indication that this support area is holding. I still firmly believe it is going to, or it may even be just at a lower level. But once we start to see that reversal take place, and I'm talking about that of the bearish sort of swing to the downside, losing its momentum, and then, of course, starting to see follow through and a reversal to the upside, well, that is when we will start bringing down these bullish triggers to take advantage of that next higher low. But at the moment, we have to be a little bit patient. We have to be a little bit disciplined with our analysis and with the market itself, and just allow the active market participants out there to see how much they want to factor into, or at least this new advanced fundamental backdrop sort of shift, all right, factor into the current price action of the market, and then we'll just move with it when we're able to, okay? But until these trend lines break, I'm still optimistic and bullish on this market. And the reason I say that is because we still have these open windows. It may seem a little bit foolish. Trust me, it's not. You don't want to fight the trend. The trend is very clearly to the upside, but don't get caught up in the hysteria of the market shifting to the downside and, you know, trying to quickly sort of scalp that of a swing trade to the downside that just simply doesn't exist. The swing trade you'd want to take would be the break of that bullish trend line. However, again, that's not going to happen as at Tuesday. I think that's really what I wanted to reference. As I said, I will be back later as at today to recap the markets and to give you, of course, the final print for today's session. I am quite interested in that. And you always anyway have the choice to actually liquidate out of any open positions that you do choose, or at least that you are in. Makes sense as well. But at the same time, this market is still bullish until we break below those support areas. And I'm not suggesting that they are going to break at this current juncture as we move into Tuesday's session. Also, keeping in light of obviously what is happening, it's going to be interesting. I'm just putting it out there to see how GLD responds. Okay, if we don't see any reaction in GLD, well, then it's a very good opportunity to actually bring up the stop on that trade. All right, if we don't see any reaction, and we're going to have to also pay attention to the US dollar as well. But depending on how these markets move, I am very interested, of course, to recap that and to see the price movements, because who knows, maybe this is the beginning of something larger when it comes to, I guess our general understanding, or at least our backdrop, or at least our sort of targets moving forward of, well, what may shift the market from a macro bullish sort of trend into that of potentially that of, a macro bearish trend as we move forward into further into 2018. But this is, again, too far into the future at the moment when we're talking about the primary and also the intermediate trend of the market. But I'm just a little bit curious of this myself. And it's very important anyway that you get a grasp on this prior to the market opening, or even if you are checking in during the day just to see what is happening with the markets and what to look for, technically speaking, and of course understanding the structure of the market. It's very important because it's going to guide us in our individual trade setups and execution of individual trades as well. So if you have any questions, email me, but I hope I have addressed them in this market update. I'll be back with you in a couple of hours' time to once again recap the US market indices. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.